Hello everyone, welcome back to our channel. The Iraqi dinar and its exchange rate have been a hot topic of debate among economists and financial experts. Recently, an article quoted economist Mohammed Hashim Helou, who strongly cautioned against floating the dinar exchange rate, calling it economic suicide. In this video, we'll explore the reasoning behind his statement and the potential consequences of floating the Iraqi currency. The Iraqi dinar has been pegged to the US dollar since the 2003 invasion, with the exchange rate remaining relatively stable. However, there have been calls from some quarters to float the dinar, allowing market forces to determine its value. Proponents argue that a floating exchange rate would make the Iraqi economy more competitive and attract foreign investment. Helou's warning: according to economist Mohammed Hashim Helou, floating the dinar exchange rate in the current economic climate would be disastrous. He cited several key factors that make such a move highly risky. 1. Parallel market. Iraq has a large parallel market for currency trading, where the dinar is traded at different rates than the official peg. Helou warns that floating the dinar in the presence of this parallel market could lead to significant currency speculation and manipulation. 2. Large speculators. There are individuals and entities in Iraq that hold billions of dinars and dollars. With a floating exchange rate, these large speculators could potentially manipulate the market for their own gain, leading to wild fluctuations in the dinar's value. 3. Inflation and price hikes. Helou predicts that a sharp decline in the dinar's value, which is likely if it were floated, would lead to high levels of inflation and a significant rise in prices for goods and services. This could have devastating consequences for the Iraqi economy and the purchasing power of its citizens. Potential consequences: if Helou's warnings are accurate, floating the Iraqi dinar could lead to several severe economic consequences. 1. Currency devaluation. A sudden and significant devaluation of the dinar could occur, eroding the purchasing power of Iraqi citizens and businesses. 2. Inflation spiral. Devaluation would likely trigger a spiral of inflation, as imported goods become more expensive and domestic prices rise to keep pace. 3. Economic instability. Rapid fluctuations in the dinar's value could create an unstable economic environment, deterring foreign investment and hampering economic growth. 4. Public unrest. High inflation and rising prices for essential goods could lead to public dissatisfaction and unrest, potentially destabilizing the country further. Counter-arguments. While Helou's concerns are valid, there are also arguments in favor of floating the dinar. 1. Market determination. A floating exchange rate would allow the market to determine the true value of the dinar, potentially making Iraqi exports more competitive. 2. Foreign investment. A freely traded currency could attract more foreign investment, as investors would have greater confidence in the market-determined exchange rate. 3. Monetary policy flexibility. A floating exchange rate would give the Central Bank of Iraq more flexibility in implementing monetary policy to manage inflation and promote economic growth. The decision to float or maintain the peg on the Iraqi dinar is a complex issue with far-reaching consequences. While Helou's warnings about the potential for economic chaos should be taken seriously, there are also potential benefits to a floating exchange rate. Ultimately, the Iraqi government and financial authorities will need to carefully weigh the risks and rewards before making a decision that could profoundly impact the country's economic future.